inflation, which is higher than people thought and stickier because of wages and a whole bunch of stuff. Higher rates. If you go back a while ago, people expected 3 would be the top. Now it's 4. They may, 4 to 4.5 may be the number. It may have to go higher. My gut tells me higher. And there's no example we have inflation coming down very rapidly over a 3 or 4 year period, down to 2%. And then, of course, this QT. We've never had QT before. It's a dramatic change in the flow of funds around the world. Central banks selling, governments are selling, foreign exchange matters are selling, banks don't have to buy anymore. And so it's just kind of an unknown quality there. And then the war, which I put in the category as a major, we really don't know the full effect, how it's going to end, what's going to happen. Oil is fragile, oil prices are fragile, supply is fragile, supply chains in oil and gas and food are fragile. It's bad. So I look at that as those things are huge turbulence, which are kind of right in front of us or in the middle of it today. And that could easily cause a recession. My comment about the stock market was, I don't know if it's going to be a soft landing. I don't think so, but it might. Mild recession or a tough recession. My point, in the tough recession, you would expect the market another 20 or 30%. I'm not going to give odds across those 3 things, but for all of us who have to worry about risk, of course you should plan for those things. As a bank, my job is to serve my client regardless of those outcomes, which is what I mostly worry about. The silver lining is that the Western world, maybe because of Ukraine, that the Western world, meaning America, Europe, Japan, Korea, Philippines, Australia, get its act together and understand how serious, if we want to defend freedom, democracy, freedom of rights, freedom of speech, free enterprise, for the next 100 years, we have got to get this right. And this, it seems like we're getting together. That's the part I like.
Welcome to Key Stock and Crypto channel. Don't forget to like and subscribe to the channel.
And we have stocks down again today. And guys, we know why. Only thing we had to do was watch the indicators. We saw yield rates rising and the dollar getting stronger. And we know that equals stocks and cryptos coming down. And we have Jamie Dimon speaking about all the chaos right now in the economy. And he's braced for stocks to go down another 30% in a severe recession. And guys, we know we're going to have a Great Depression. We know they have to destroy this legacy market in order to land us in the 4th Industrial Revolution. And because the Fed is raising rates and then also the strong dollar, it is destroying the emerging markets. And then also, guys, in the emerging markets, also in Europe went like 8 years at negative rates. And the United States, we were at 0% interest rates for a while. So, of course, it's going to cause global chaos. Now, we have Bank of America warns that the U.S. economy will start to lose 175,000 jobs per month starting in Q1 of 2023. And me personally, I say it's going to be a whole lot more than that. Don't forget the 15% tax these corporations have to pay. And then on top of it, they're paying higher wages. And also, we have Ray Dalio warns of the perfect storm that the U.S. faces: the debt, political strife, and overseas war. And we know, where is Ray Dalio heavily invested in? China. That's correct. He knows the emerging markets are about to rise. And the emerging market ETFs that I've been over several times, it's called investing 5-10 years down the road that you're looking at, because we can see the BRICS nations and automation is definitely rising. Now, guys, we had 4 of the biggest banks report today. We had JP Morgan looking good, so of course their stock was up. We had Morgan Stanley reporting earnings wasn't so great, stock pulled back. We had Citi earnings wasn't so great, but stock still rose slightly. And we had Wells Fargo's numbers looking good. And of course, their stock went up. But in this rising rate environment, these bank stocks are going to benefit until things get really bad. We know they hold a lot of derivatives, but that's the reason why central banks want to move this whole system over to blockchain and digital currencies, because the whole financial system will be nothing but an illusion. The same way they print money on a piece of paper and board up the globe. It was all an illusion. And then when you put in robots, algorithms, and drones along with the metaverse, nothing will be real. Now, this article states the best buying opportunity, why now is a good time to invest. And do I agree with that? No, I do not. Guys, I'm not your financial advisor, not financial advice. Please do your own research. But because the Fed is still raising rates, still doing QT, you're definitely going to have a better buying opportunity. Now, is this a time to trade? In my opinion, yes. And then you can take those profits, put it in cash, let it sit to a side. So then, therefore, when you are ready to invest, you can get a better entry point. We still have a ways down. The only thing we have to do is follow the Fed. The Fed has clearly given us a blueprint on where they're taking this economy, and we know what indicators to pay attention to. Now we have Kroger wants to buy Albertsons for $24 billion. And guys, we're seeing more monopolies. We're seeing a big consolidation of the whole globe. As this not just America, it's the globe. And the reason why, guys, because we know the fourth industrial revolution is global. Everybody's working at the same thing. Blockchain and digital currencies, tokenizing everything. And we know these big corporations are going to leverage the robots, algorithms, and drones. And then we have the U.S. satellite giant Viasat $7.3 billion takeover of the UK rival Emersat face competition probe. And again, guys, more monopolies. And we know how important satellites are going to be to the fourth industrial revolution. We see Elon Musk building Skynet. We know these robots, algorithms, and drones need 5G. But lastly, guys, we'll go over the indicators. We had yields up, dollar up, VIX up, and what does that equal? Stock market down. Guys, do not forget the fundamentals. But that's all I have for you. Have a wonderful day.
Don't forget to like and subscribe to the channel.
Certainly have looked at the most recent forecasts in the World Economic Outlook, the IMF report, and their prognosis for their forecast for the global economy has weakened. Europe faces particularly serious strains because of what's happening to energy prices there, particularly natural gas prices. And many emerging market countries, as I said, face a host of, have very little fiscal space and face a host of significant problems, including higher energy and food prices that are driving, another 75 million people this year into at risk of, starvation.